Okay, it's the middle of February. How's your New Year's resolution doing? I know I had the New Year's resolution to lose those COVID-19 pounds that I put on last year. And it still feels a little bit like we are in this 2020 hangover, right? We're still wearing a mask. We still have some volatility. We're still talking about impeachment and stimulus packages and all of those things. But thankfully, the market's been moving higher. And I think at this point, as we look forward into the balance of the year, I think there are some reasonable expectations that markets are going to continue to move in this way. This is our February update, and so we'll have some more here coming soon. And right now, what we're seeing are some of those investing themes that we saw as we ended last year. Specifically, we have vaccines being rolled out still, and the COVID numbers are improving day by day and week by week, getting us closer to getting to a post-COVID economic recovery from the COVID recession that we were in last year. In addition, we have more stimulus that's going to be kind of decided upon in Congress. We had 2 stimulus packages passed last year, which was a huge shot of caffeine and sugar for the economy, getting businesses and small businesses kind of closer or bridging that gap to a post-COVID kind of environment so they can survive. And then we're looking at having another one of those stimulus packages, perhaps even bigger than $1 trillion, passed here soon by Congress. And then finally, we still have the Federal Reserve committed to keeping interest rates low for a number of years, despite what may happen with inflation. I won't get too deep in the weeds, but the Federal Reserve has actually changed their target inflation measure, which suggests to many investors that the Federal Reserve will allow inflation to run a little bit hotter, a little bit longer before they decide to raise rates. And rising interest rates are one of the things that can derail market runs like the one that we've been on for a little while here now. So what are the downsides to having stimulus and low interest rates and a recovery from a recession? Well, in the short term, probably none, or not many really, but there's no free lunch. And as I've talked with many clients on the phone about, at some point we probably will need to reconcile with this idea that we're going to have some inflation, and that inflation will become a bigger factor here, and the Federal Reserve will ultimately need to address it, and that could cool things off a little bit. We're not convinced that it's totally a 2021 problem. It could be a 2022 or even 2023 problem. If you think of the economy as kind of maybe a basketball that's inflated, at this point, if we're worried about inflation, we're worried about overinflating this basketball. But we've been in this recession, so if anything, this economic basketball has been deflated, and we're simply trying to get it back to where it ought to be before we need to worry about blowing it up too big. So, I hate to use sports analogies, but I think this one is apt. We're reflating the economy right now. That's usually a good sign for markets. But the thing that we need to keep an eye on right now is inflation and interest rates and how quickly those things might come into play and affect markets. But I'll say this again, I say this oftentimes when I'm talking with folks, we are investors, we are not traders. So just because the wind changes directions on us one month or another month doesn't mean we're going to totally abandon whatever our retirement plans and investment plans are. And so if we do hit some volatility this year and you do have some worries and you have some questions, I would encourage you to give your advisor a call. You can email us at info@fordfg.com or come by once we are able to reopen to clients, which hopefully is going to be very soon. And in the meantime, we'll just need to keep wearing masks, stay safe, and do all the social distancing stuff until we're all vaccinated. I'll leave you with a couple of more things. I would say if you have other inflation questions, of course you can email us or call us here. But our last couple of podcasts has addressed this inflation question specifically. So I would urge you to find us wherever you listen to your podcasts. You can listen to the Financial Insight podcast where we talk about these things like inflation pressures that may be coming from the economy. And then finally, next week on the 25th at 1 o'clock Pacific, we'll also have an investing basics or the basics of investing webinar that we're putting on for clients and their guests. And so if you'd like to learn a little bit more about the nuts and bolts about portfolio construction and investing for the future, I would encourage you to reserve your spot for the webinar. I'll link below this video so you can register for our upcoming webinar. So I hope you enjoyed our February update. I look forward to talking with you again in March.